started out as a part-time trader. And I did that basically from about 2000 to 2012. Really got serious about it in the mid 2000s. That was during the commodities boom. And from there, gradually built my account to where I could trade full time. And in 2012, I went full time. And after going full time, I started initially dabbling in day trading because basically I was bored. Because with swing trading, you put on 4 or 5 positions and there's nothing to do the rest of the day, which was perfect when you have a full-time job, which I know a lot of people listening today are probably in that position. But I got into day trading and that's been going really well. Understanding what setups to be trading. That's a really important thing that I think a lot of swing traders miss is, you have this basket of setups. I think for me, I'm probably trading, I've never kept an actual count of how many different setups I trade for swing trading, but it's probably somewhere between 30 and 40 different setups.
Wow.
So for example, in the current market, more recently after the sell-off we had in early 2018, now things are starting to look better and we're seeing the market kind of continue rather than break down. So if you're trading breakdown patterns, you're probably not going to be doing well right now. If you're shorting, you're probably, unless you're picking the right stocks and specific setups, you're probably not going to be doing as well right now. You want to be trading the setups that relate to, say, continuation patterns. I had a pretty demanding job in the legal field, so I was doing that. And then when I actually went full time, I thought, whoa, this is a dream. This is what I want to do. But then I had a lot of downtime, and that's when I got into day trading.
Do you ever face a losing streak? And I guess the follow-up question, that's going to be, how do you handle them?
Losing streaks are normal in Forex. I don't handle them. I just go through them. There's a whole mathematical side to trading. I'm not a good math guy. Some of my students are good math people, and one of them in particular has done a lot of the mathematical side of trading. If you have a 50% win rate, over the course of 100 trades, it's statistically normal to have a losing streak of 7 trades. So that losing streak is perfectly normal. That losing streak would happen not just in Forex. It would happen if you're flipping a coin. It's going to land on heads 6 times in a row over the course of 1,000 flips. That's just normal. Or maybe 7 times, maybe 8 times in a row. So losing streaks just come down to probability. When I'm in the middle of a losing streak, I'm just like, this is normal.
Yeah.
Like I just keep trading because I know that next month I might have a win streak of 6 trades in a row. And I'll be like, yay, I've won 6 trades in a row. Awesome.
Yeah. And you have no reason to feel bad or like that you feel like you're a loser because you have 6 trades or 7 losing trades in a row.
No, it's just normal. It's just, that's trading.
Exactly.
It's the reality of trading. You are going to, I think we were talking about this over lunch. I think like Western civilization. So like, America, the UK, all these countries where our economy, our countries are based on capitalism. And I'm not saying there's anything wrong with capitalism. I'm just saying capitalist places, it's all about winning. You want to win. That's like what we're programmed to do from when we're kids is win. And we feel bad when we lose.
Yeah.
But you kind of got to tweak your mindset when you come to trading. Trading is not about winning. It's about being profitable. And they're 2 different things. You can be profitable as a trader, winning only 40% of your trades. You can be very profitable. I know a trader who wins 30% of his trades, but he's still profitable. So he loses 70%, but he's a profitable trader. So what that trader has done is he has accepted that losing is a part of trading, and he's happy to lose because he knows at the end of the year, he's still going to make money.
Because people like their own thing, which is fair enough. But I think what the mistake that they make is they don't wait for the market to move. I've seen that everywhere. Everyone wants to predict. And actually, the day you hold up your hands and you say, well, I really don't know what's going to happen. I'm just going to follow the market, follow the momentum. It's the day you actually start making money.
Yeah.
And actually, maybe what has to happen is, as a trader, you have to come through some sort of education. I think some type of internal education where you ultimately say, well, okay, no, I give up. I really can't predict it. It hasn't worked because, there's some of the smartest guys in the world in this game, especially in stocks. Less so in Forex, but in stocks. And if they can't do it, then it means that it's just too big to handle. It's like trying to wrestle a crocodile wearing gloves coated in olive oil or something. You just can't do it. So just let the associated market fight it out, and then go with the winner.
Mm-hmm.
That's what I do. So we talk about the resistance points. The price is going to the upside, and it's almost a vertical line, comes up very, very fast, maybe runs 60, 80 pips up to the line. It's very unlikely that it's going to have the speed to actually go through that level at that point. So what typically happens is that the price, there's an equivalent size candle to the downside, and that for me is the signal to go short. So when you get big candles coming up into the resistance point, you get then a really good push away from that. That is an indication that someone somewhere has really said, okay, we don't want this to go any further. And that the higher you get the quicker you get into that candle, the higher you are in to that sort of resistance level, the better from a statistical point of view. You got more chance that the price is going to move away a little bit further. And the worst that can happen is it just turns around and stops you out above the level.
And, we teach people to have various clear risk limits on all kinds of measurements per trade, per month. There's so many different things. And this is the two most underestimated and underappreciated aspects of trading are risk management, or your risk profile, and trading mindset or trading psychology. They're the most underestimated and underappreciated. If we were to go scour the internet, we had some sort of machine that could collect all the articles on trading, all the different, posts and videos, it's probably going to be 70, 80% skewed, maybe even more towards charts, patterns, indicators, systems. And then the remaining 20% is probably the majority of that. 12, 15% of that is going to be on mindset. And then maybe 5% is going to be on risk management. And yet, with that kind of imbalance, if that really was working, more people would be profitable now, wouldn't it?
Yeah.
That's not what's happening. So people underestimate and underappreciate their risk profiles, risk management, and trading mindset. And so, my general approach to success in a lot of the things I do has been to reverse the equations of what the majority are doing. If the majority of people are watching 10 videos on trading and 8 of them are on charts and one of them's on mindset and one of them's on risk management, I tend to invert that equation, because the majority of people are not high performers or elite performers or highly skilled.
First, look at as many trading strategies as possible, but look at them not from a standpoint of how much money can I make with it or how much money is the creator making with it, but more like, does this click with me? Does this make sense? Because then you can make progress much faster. If it clicks with you, you can trade a strategy much, much easier. And then you take those rules from the creator or whatever, and you backtest them, and you see whether they work or not. And if they don't work, but you still like the system, you make adjustments, but you make them step by step, right? Each 30 trades roughly, that's the number from statistics. After 30 trades roughly, you get a meaningful sample size. Then you change one little thing. You maybe use a different take profit or stop loss strategy, for example. Don't fiddle too much with the entries. Try to fix your trade management first and see whether you can create an edge out of that. And then you just adjust the take profits first. Then you adjust your stop losses first, and you slowly create a strategy out of that, which then will become your own after 500, 600, 700 trades.